The what?
What if you don't spend 50%?
What if you don't spend 50%? You're only doing it based on what's being spent. I think your question is a little different. The question is, what would happen if for some reason you were able to spend less than $500,000 each year? Is that your question? Yes. And you know what? In that case, you would not be subjected to it. Even though you've received what? More than 5, because it's over different years. It's kind of a strange thing, but that's how it works. But for most states, $500,000 is a very small amount in terms of what they would get from government, from the federal government. It's in millions and millions. So, and that's why they actually raised it to $750, because the amounts are so much larger than that. But do you see that? Yeah. So once again, because this is an important part of the single audit, what approach does it use to audit, single audit use? Risk-based approach. How does it do that? By taking all the programs that are funded by the federal government and dividing them into two buckets, Type A and Type B. How do you know what to select? Well, you use the 3% rule. If it's 3% or more, it becomes what? Type A program. And then you do what? You also look at the history. Was this program, did it have any trouble in the past? If it didn't, you can pass that for another high-risk program. So basically, the rule is even simpler. You basically audit all high-risk programs. Doesn't matter, Type A or Type B, you want to go for the high risks. And then you begin to eliminate them down. Now, I have given you, this was one of the assignment questions assigned for this week. By the way, there's no assignment for this week. I'm going to give you so you can prepare for the exam. I'm going to go through the solutions now, and I'm going to post them so you don't have to do that. Instead, use the time to study for the exam itself. But that is one of the questions that's there which calculates that, and you'll see how it does it. Okay. So auditor and auditee have responsibilities for the reporting package that must be filed and sent electronically. And another piece to think about here, and I don't know if there's a slide here. You thought governmental auditing was complicated. How about if I told you the OMB and GAO did a study to see the audits, the single audits that were submitted to the federal government, how good were they? They did a quality control review. Guess what the result was? These are government auditors who are supposed to have read the yellow book, were supposed to be trained, can pick major and Type A and Type B programs in their sleep. Guess what? Yeah.
I think the textbook said it was 60% have to be deficient.
Yeah. As he said, 60% of the audits were deficient. See the problem? 60% of the audits filed were deficient in some way, and 40% carried a high level of deficiency. So it just tells you that, and that's what they're trying to do, is really improve the compliance and being able to, and that's because what are they doing? They're just taking auditors who are doing commercial stuff and saying, you know what, read this book over the weekend and go and do that audit. And it doesn't work that way. But it's really not even the staff. It comes down to the partner level, is that the partners are the ones who are supposed to review this. As I said, KPMG has a very big practice. Deloitte has a big practice in the government area. In fact, the partner, Jane Letts, who is in charge of New Jersey, is on our board of advisors, and is a terrific person, and they, it's amazing, they do the entire state of New Jersey. I can't imagine of firms spending the time and the resources required to do a single audit of the entire state itself. But KPMG is very big in this area. And as I said to you, one of the important areas in single audits is the this thing called the schedule of findings and question costs. So what you have is your financial audit, and at the end of the financial audit, you have schedule of findings and question costs, a schedule of expenditures, and then what they found which was not proper. Could be internal control issues, it could be non-compliance issues, not meeting the term of the grants. So don't think of single audit as a financial audit. It really looks at the terms of the grant that you got and checks to see if you complied with those terms. So, and that's what we talk about findings and question costs, and if things are really bad, the federal government can ask you to refund the money back to them. Okay. So one of the questions is, who monitors all this? Think about 50 states, all these countless entities. Well, this is where the next topic comes in. But, okay, before I do this, question cost involves an instance. Look at the low threshold. Cost greater than 10,000 or great must be reported in schedule of findings and question costs.